Imagine a company so valuable that its peak worth surpassed the combined market capitalization of today's largest tech and energy giants: Apple, Microsoft, Amazon, and Saudi Aramco. This titan wasn't founded in Silicon Valley. It was established over 400 years ago in the Netherlands. Its name? The Dutch East India Company, or VOC, Verenigde Oost-Indische Compagnie. The VOC's impact goes far beyond just its value. This quiet Dutch company engineered the world's first corporation, created the first formal stock exchange, and launched the first initial public offering, or IPO. Long before the Rockefellers or Rothschilds, the VOC and its silent partner, the House of Orange, laid the foundation for modern global capitalism. Our story begins in 1580. Spain, a global superpower, annexed Portugal in a personal union. Suddenly, the Spanish monarchy controlled the vast overseas empires of both nations, shifting the global balance of power and threatening the Dutch provinces, which were already fighting for their independence from Spain. The Dutch knew they couldn't win with just guns. They needed a new kind of weapon: private capital. In 1602, 7 competing Dutch trading companies merged to form the VOC. While on the surface it looked like a simple merchant enterprise, the VOC was in reality a machine of economic warfare. It was chartered by the Dutch government to trade with the East Indies, a region encompassing modern-day Indonesia and Malaysia. The mandate the VOC received was unprecedented. It was granted quasi-sovereign powers. It could maintain armed ships, raise private armies, build forts, sign treaties, capture territory, and even govern entire colonies. The most radical aspect was its structure: shares. For the first time, ordinary Dutch citizens could invest capital to fund imperial expansion and, crucially, profit from it. The VOC could scale its operations, from building fleets to raising armies, without relying on a monarch or raising taxes. This was wealth manufactured at scale through markets. While merchants ran the daily business, the foundation of the company was quietly supported by the House of Orange. This prominent dynasty, which held a weak title, Stadtholder, in the merchant-led Dutch Republic, found its traditional feudal power based on land and titles obsolete in the new commercial order. They were squeezed by Amsterdam's powerful elites and threatened by Spain. The House of Orange chose to adapt by using their only asset: capital. They didn't run the VOC, but they helped bankroll it, strategically tying their future to its success. Their involvement gave them strategic leverage in a merchant republic where legacy no longer guaranteed power. Decades later, this connection became official. Descendants of the House of Orange, such as William IV and William V, served as presidents of both the VOC and the West India Company. They effectively became among the most powerful men in the country. Their power was no longer backed by a crown, but by dividends. At its zenith, the VOC didn't behave like a business. It moved like an imperial state. At its peak, the Dutch East India Company was worth more than $7.9 trillion in today's money. During its golden era, from the early 1600s to the mid-1700s, over 1 million people departed the Netherlands to Asia to work for the company. These weren't just explorers, they were employees of a mega corporation. The VOC recruited sailors, clerks, soldiers, and craftsmen to run its ports, guard its warehouses, and enforce Dutch interests, sometimes at gunpoint. The success of the VOC stood on 3 pillars: its powerful state charter, the wealth of Amsterdam's financial elite, and the strategic backing of the House of Orange. The charter allowed the company to sign treaties, raise armies, and govern entire colonies. With nearly 150 merchant ships, 50,000 employees, and its own private force of 10,000 soldiers, the VOC moved confidently like a state with sails. Nowhere was its dominance more profound than in the East Indies. In 1619, the VOC captured Jakarta, renaming it Batavia. This was not just a name change. Batavia became the center of gravity in Asia, a command hub that ruled surrounding kingdoms for 300 years. This scale of operation needed serious, long-term money. Instead of relying on kings or short-term loans, the VOC created something revolutionary. In August 1602, the Dutch East India Company opened its doors to the public, offering its future to ordinary people through the world's first ever initial public offering, or IPO. Capital flooded in. This innovation created a new financial system. Permanent shares. Ownership was not temporary, and it could be freely traded. This gave birth to the world's first secondary market, the Amsterdam Stock Exchange. Traders quickly started betting on future prices, created a market for speculation and arbitrage that used all the tools Wall Street uses today. To encourage investment despite the high risk, the Dutch created a legal breakthrough: limited liability. If a ship sank or a trade route collapsed, investors only lost the capital they put in. Their personal properties stayed safe. This concept changed businesses forever and is a cornerstone of modern finance. Transferable ownership. The VOC printed actual share certificates that flowed smoothly from hand to hand without the need for royal permission or family inheritance. The influence of Dutch finance quickly crossed borders. In 1688, William of Orange, born into the House of Orange, Nassau, was invited to take the English throne alongside his wife, Mary II. This wasn't just a political shift, it was a financial revolution. William brought with him the Dutch mindset that merged capital with governance. During William's reign, England launched the Bank of England, created public credit, and funded wars through government bonds and capital markets. These were Dutch innovations, now written into British law. The story stretches even further across the Atlantic. In 1624, the Dutch West India Company founded New Amsterdam at the south end of modern-day Manhattan. Though the British took over and renamed it New York in 1664, they kept much of the Dutch structure, the legal systems, credit customs, and commercial habits, because they worked. This financial blueprint, later blending Amsterdam's system with London's, laid the early groundwork for New York to become the world's leading financial engine. By the late 1700s, the giant began to sink. Power had scaled fast, but oversight and governance failed to keep up, and corruption crept in. Internal divisions deepened, and intense military competition from Britain and France drained resources. By 1795, the VOC was no longer all-powerful. The company was nationalized by the Dutch government and officially wound down in 1796. The mighty company that had been founded in 1602 finally expired. But while the empire collapsed, its architecture of power lived on. The VOC's ideas transformed into modern finance, legal structures, and multinational corporate models we still rely on today. The Netherlands is a global financial powerhouse. Its influence is felt in boardrooms and treaties, ranking highly for foreign direct investment. And behind this network of capital, the House of Orange, Nassau, still reigns. The crown may be ceremonial, but the family's connections are nothing but symbolic. They quietly hold stakes and maintain influence in major Dutch industries. This legacy can be seen in modern titans like Royal Dutch Shell, formed in 1907, a company that carried a royal title and came to dominate the global energy sector. It can also be seen in the banking giant ING Group, which traces its roots back to the Netherlands and leans on the Dutch corporate architecture that echoes the VOC-era foundations. When we think of capitalism, we often think of the Rothschilds or Rockefellers, but those figures simply followed the model. Long before them, the House of Orange engineered a system where war, trade, and finance moved together.
It is essential to talk about the atrocities the VOC committed during its expansion in Asia, as its financial success was built on violence, exploitation, and massacres. Banda Islands Massacre. The VOC nearly exterminated the indigenous population of the Banda Islands. Thousands were killed, the survivors were enslaved, and the company replaced the local population with Dutch settlers to secure the lucrative spice monopoly. Amboina and Batavia massacres. The VOC executed English and Japanese traders on the island of Amboina on false accusations of plotting against the Dutch fort. A later incident, the Batavia massacre, resulted in the deaths of thousands of Chinese civilians in what is now modern-day Jakarta. Forced labor and violence. The company established a widespread system of forced labor, compelling indigenous populations to cultivate crops for the company's benefit. The VOC frequently used military force to suppress resistance and maintain control over trade routes and resources, causing widespread suffering and deprivation. From the rise of the VOC to the reign of Royal Dutch Shell, a pattern emerges. Power and capital are always inseparable. The House of Orange realized early on that capital could be more potent than crowns. The Netherlands may no longer rule the seas, but Dutch capital now moves across borders with more influence than fleets ever could. This brings us to a question that still matters today. If markets now hold the power that was once reserved for monarchs, who governs the markets? Who holds the crown when the crown is invisible?